Are you ready to start the year fresh and grow your $500 account to $1 million in 6 months? Just kidding, there's none of that marketing BS here. If you want to set realistic goals to grow your small account slow and steady in 2020, here are the 3 tips to follow. Remember that one time when you followed the chat room alerts and made $1,000, only to come back the next day and repeat the same thing but lost $2,000 instead? Believe me, I've been there, done that. As somebody who's been through the same struggles and lost big, buying breakout and bag-holding losers for way too long, I want to share some realistic tips to help you grow your small account in the new year. And I'm confident to say that these tips will help traders of all levels, from complete beginners to the experienced to the Lamborghini gurus who never lose. And before you even ask, no, I'm not gonna take 1,000 steps back and grow my $500 account from scratch. Why would I ever do that? Unless I have a $5,000 DVD to sell. So if you're ready to start the year fresh and grow your small account in the new year, make sure to destroy the like button to have a profitable 2020. First and foremost, we cannot improve our trading for the future for the rest of the new year if we do not take a step back and analyze how we did in the past, which is our strengths and weaknesses in 2019. Speaking for myself, after analyzing a lot of my trades from 2019, I realized that one of my biggest downfalls is not having the patience to let my trades work out. A lot of times, after 3 to 5 minutes, I get really impatient and I'll exit the trade for either a small loss or a small win, only to see the stock breaking out to new highs and run for another 1 or 2 points according to my original plan. Maybe it's because I'm a millennial, I'm young, but I really need to work on my patience in trading. Probably the same way in dating too. A really good example of this weakness of mine is this CLVS long trade. If you're on my weekend watch list email, you've probably seen me talk about this stock a couple of times. And looking back, I had a really good read on the stock. I was observing it for about 2 to 3 weeks. But as you can see from a lot of my long trades on this stock CLVS, you can see me going in to buy the dip after the morning sell-off, only to bounce it for about 50 cents to $1. And all the while, the stock was going parabolic on the daily chart from $10 to $17. And it's the same thing with this BPTH and JMIA trade on the short side. I wasn't patient enough to let it work out according to my own plan, only to see the stock dumping after I had already gotten out for a small loss. And I know what some of you might be thinking at this point. It's okay to take a small loss, or it's okay to take a small win. Profit's profit. But I think in the bigger picture, if you always take small wins and small losses and not having any bigger winners, then your true risk reward on all your trades is 1 to 1. And ideally, we want a risk reward ratio greater than 1 to 3, both on the potential trading setups and the actual wins and losses that we do end up taking on our trades. So I think that's definitely something worth making a note of. Fortunately, adding bigger into my winners is one of my strengths in 2019. It was a goal of mine at the beginning of 2019 to start adding bigger into my potential winners, and at the same time cutting my losers smaller with just starter size. While I do lack the patience to let my trades work for a longer period of time, some of my biggest winners of 2019 were from me adding a lot bigger size after recognizing that this is an A+ setup and the stock has a lot of room to go on the daily chart, which allows my overall risk reward to be bigger than 1 to 3. So my question to you is, have you gone back to review your best and worst trades of the last year? Do you have any problems such as chasing breakouts, not cutting losses quickly enough, or being too biased, long or short at all times? And what are your strengths or some of the things that you're really good at that make you bigger winners? Are you able to switch bias quickly from short to long when you see a low float penny stock squeezing with volume? Or did you get really good at reading SEC filings this past year to add to your conviction when you're shorting parabolics? This is extremely important, especially if you have a small account. You want to lean into your strengths in your trading in 2020 and reinforce them. All the while, you want to take measures that will prevent you from repeating the same mistakes that's causing those bigger losers. Let me know in the comment section what are your strengths and weaknesses, because chances are you and I had the same experience as well. From buying breakouts and chat room alerts to bag holding a loser for way too long, I've done it all. I'll be happy to help and provide some feedback from my own experience, not as a trading guru, but as a trader who's never perfect. Now, I know you must all be thinking at this point, okay, Humble Trader, enough with the bad jokes. What is that one secret strategy that'll help you grow your small account? Well, yes, while I will be mentioning some strategies that I think is suitable for you later on, I do think the bigger emphasis should be focusing on building a good trading habit, which is the next tip I have for you for building your small account. And really, I think this is the secret that's the most overlooked in an ocean of day trading marketing telling you about all the quick and easy money. In my opinion, there's no secret sauce that's gonna make you millions of dollars. There's only good trading discipline. Because let's be real here, it doesn't matter if you have the best strategy in the world if you do not have the discipline to execute and keep the money from your hard-earned Lamborghini money. The stock market is like a beast that's ever-changing. Every day there's something different, especially when you're playing volatile penny stocks. So it makes sense to keep the few things you have control over constant and grounded. And those things are, do you have a pre-market planning process? Do you have a morning routine before you even sat down in front of your computer? And after you're done for the day, do you have a routine of going back to review your trades and the charts, or going to the gym, or watching Humble Trader videos and destroying the like buttons? For me, I have a pretty rigid pre-market planning process, which I shared in these two videos. And in general, I have a pretty set daily routine every single day from 7 a.m. market time to 6 p.m. after the market closes. And yes, that does mean I wake up at 4 a.m. every single day on the West Coast here, unfortunately, and technically I'm working 11-hour days. I don't know, man, I feel kind of tricked, honestly. When I signed up to those Day Trading Guru DVDs many years ago, they promised me I can make millions of dollars working only 1 hour a day and trading from anywhere in the world. From drinking on the beach, driving a Lambo, to sitting on the toilet. Now 6 years later, it's just me alone at home with no beach or Lambo in sight. Wait, let me check. No Lambo in my garage out there. Okay, I want to be fair here. I do own now, not just one, but 2 toilets. So those DVDs are definitely working. So it's important that you have a set routine that you can repeat every single day. It doesn't have to be the whole day like I do because I'm OCD and have no life, but you should at least have one for the hours that you're trading, even if it's just 2 hours at the market open before you go to school or go to work. I had done exactly that myself, and I'll be making a video soon on that topic. Also, I highly recommend reading the book Atomic Habits by James Clear, which I mentioned in this video talking about my top trading books. It'll help a lot with your trading psychology and creating good trading habits for 2020. Now, the next tip I have for you for growing your small account is to focus on just 1 or 2 strategies that you're very good at and block out everything else. If you know you're a better lone trader who buys low float penny stocks after it sells off to a previous support levels, then just wait for those setups. It doesn't matter if you see other traders making millions of dollars on social media shorting penny stocks. If that's not a strategy that works for you, then it's a distraction. And vice versa, if you know you're a better options trader who can make money buying covered calls or naked puts on blue chip stocks, then focus on those and stay away from penny stocks. The truth is, there's many different ways to make money in the market, but it's too easy for beginner traders to get overwhelmed by what everyone is saying out there and experience analysis paralysis. I had the same problem when I was starting out. I was buying penny stock breakouts 1 week, and the next week I was shorting parabolics and trying to catch the falling knife. I was literally everywhere but going nowhere. And then I finally took a step back and went back to paper trading. It's only after I started focusing on just one setup at a time that I found out that I was really good at buying mid-cap stocks that have positive catalyst. That can be anything from good biotech data to good earnings. And that was my focus for the entire year. So I started growing my small account with that one strategy I knew I was good at. And in the meantime, I was practicing buying penny stocks on paper trading and Thinkorswim on demand. And that's my suggestion for you for growing your small account. Find one focus and become very good at it. Maybe it's by studying SEC filings and find ATM offerings and dilutions and swing those stocks short. Become an expert at one setup that you can repeat every single day, and only then start branching out to other strategies by paper trading. The truth is, what works for other traders is probably not gonna work the same way to you. You have no idea the amount of messages and comments I get on a daily basis telling me that I should try this new strategy, this new spreadsheet, or that I'm missing out by not trading options or not buying this new 100% success rate indicator. We're all different traders. I trade momentum on small cap and mid cap stocks ranging from $1 to $50, both long and short, and that's what makes me money, and that's why I talk about it on this channel. That's my focus. I have a few strategy videos on the channel that's suitable for part-time traders with a small account, such as the large cap gap up strategy and loan in the morning bounce setup. All the videos I've made so far on the channel will give you a general framework of how the strategies work. But it's up for you as an independent trader to find pieces that's useful and fit them into your own trading style. I'll be making more videos soon on setups and strategies that's suitable for part-time traders with a small account. So if you only have time to trade 1 or 2 hours at the market open, make sure you subscribe and ring that notification bell, because there's gonna be a lot more practical day trading videos coming soon without any of that Lamborghini bullshit. Instead, you just get some bad jokes. As always, if you enjoyed the video, please remember to smash the like button. Also, I'm thinking of doing a Q&A video soon for both the trading and non-trading related questions on my Instagram story. So if you're interested in having your questions answered, feel free to follow me there. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next week.